Hello everyone, it is Evan here from the Trade Risk, and this is your Stock Market Weekly update for Friday, January 5th, 2024. Happy New Year. Let's get into it with a change of tone for this market. Going over the hump here, turning the page to 2024 has definitely brought a little bit of different flows coming to us. Really at the root of it, I think we can draw the causation here to interest rates and the expectations for the Fed in March meeting starting to get recalibrated here. So the bond market rates have been back up on the rise here. We're going to look at those charts in just a little bit. The market now toning down its expectations for a rate cut in March, now getting a little more perhaps complacent or understanding that maybe things are going to stay the same through March. We saw, of course, the SPY break its 9-week green streak this week. Of course, now 9 weeks up in a row, something eventually has got to give. Typically, the first of the year can still be the seasonally strong period, so that seems to be taking a lot of traders perhaps by surprise. But from a structure perspective, looking at how far we have covered in a 2-month period, some pullback and digestion here is certainly in the cards, and I think to be welcomed. Biggest 2023 winners really were the hit hardest this week. So they were biggest winners, really down the most in a general sense. And all eyes on Bitcoin. Bitcoin looking like it's going to grow up on Wall Street with its ETF approval on the horizon. Of course, it's not guaranteed. January 10th is the deadline. Let's get into all of this and more here in just a second. Stay tuned. All right, we've got some charts in front of us. TC2000, that's what we're looking at. That's the charting platform we're going to be using throughout this video. For you traders out there that are users of this platform, check out thetraderisk.com, our own website, and see all the cool things that we have built for it. If you need support, if you need custom stock scans, if you need indicators, layouts, all kinds of things for TC2000, let us know. We can help you build what you're looking for. Let's get into the numbers here in the 1 week returns here. So you can see it's a sea of red. Dow Jones did the best here, 0.58% in the red. S&P down 1.5%. Nasdaq down 3%. Russell down 3.5%, a little bit over that. So you can see it was a tough week to start the year. And volatility indices were both up basically a point here. So market VIX up 13.42 into the weekend. Nasdaq vol up over 17. You can see the 5-day action down here in all these charts. Basically start in the top left, finish in the bottom right. Just a steady selling week throughout the week. Now let's take a look here at sectors. And if we sort here on the strongest to the weakest this week's performance, you've got healthcare at the top of the list, utilities and energy. So there were some bright spots this week. They just weren't the spots that were the big winners last year. So healthcare was up 2%, same with utilities, and energy up 1%. Technology was the biggest hit this week, down 4.34%, followed by discretionary and industrials. Take a look at this another way. So let me sort the 1-year performance. So this looks back over the past 1 year. Top of the list here is technology, consumer discretionary, and communication services. These were basically the hardest hit, hardest sold this week, right? So again, new calendar year. Also makes sense, taking some profit, deferring some taxable gains. If you've got big gains in 2023, well, may want to just wait an extra day, let that calendar flip over, and then realize some of those gains. You can defer your Uncle Sam payment for an extra 12 months. This also kind of feeding into this, no doubt, as of course, with some of those other market expectations that have changed this week, also help fuel the selling. Let's take a look here at our custom smart trend filters. You can see 2 sell signals produced here on our daily smart trend filters. Technology printing red, same thing with discretionary printing red. Few other changes mostly into the neutral state here in some of these other sectors, but you can clearly see biggest hit or hardest hit coming objectively from XLK and XLY. If we take a look here at market breadth numbers, so from our 52-week highs and lows, if we look at our two measures down here, you're seeing certainly a dry up in percentage of stocks, or the number of stocks hitting 52-week highs. So that's this row right in here. So you can see we certainly dried up here, going under 100 this week, basically, for the number of stocks hitting 52-week highs. You didn't quite see a flare up here in stocks hitting 52-week lows. So again, when you look at a ratio perspective, things are still not flipping aggressively underneath the hood. But this is certainly a ratio we're going to continue to measure here. Don't like when things dry up like this. And what we don't want to see going forward is this ratio, or this number, I should say, this hard and fast number of the 52-week lows start upticking. That would be bad for this market. So far, we're not getting that just yet. You can see we are still pretty extended and kind of overheated here in terms of the percentage of stocks over 50 SMA, percentage of stocks over a 200 SMA. This ratio is pretty darn strong, and this goes to show you again how much strength there has been out there in the market over the past 2 months. We've had plenty of stocks up 10, 20, 30, 40 plus percent. So to give some of those gains back, some profit taking, and some natural healthy pullbacks, I think are welcomed generally. You just don't want to see a total exodus from markets. You don't want to see breadth start to seriously deteriorate, and we don't want to see interest rates go completely wild to the upside. Now, if we take a look here at Investors Business Daily, that's IBD, their top 10 stocks on their IBD 50 list. Shout out to them for being a sponsor of the show. You can get access to this list with a link in the description of this video. You can see it was a rough week for some of these growthier type names as well. GCT obviously kind of standing in its own bubble here. It's the number one rated stock on IBD's list. That was up 10% this week. Everything else kind of in a sea of red. Once again, I'll point to the performance over the past year has been very strong for a lot of these stocks, and that sell-off, that profit taking, certainly taking hold this week. Now, if we take a look here at commodities, natural gas, really, again, clobbered, crushed, or, whatever you want to call it, it was nasty in 2023, but it's coming back with a nice rebound here to start off the new year. Oil also up nicely, and the dollar index was up this week. So again, kind of the trade going hand in hand with interest rates, dollar. So dollar was up pretty nicely here. Gold, copper, silver, all down. DBA down. Nothing too dramatic there, but continue to pull back. Interest rates, yields, right? Treasury yields. This is the story here, and take a look as of the highs of October. We started to break down from this trend really entering November. We've been in this nice smooth downtrend for treasury yields across maturities, and now you're starting to see this reflex bounce, this rally now getting a little bit more steam than it has in recent past. So we're going to want to keep a good eye on this, and I'm sure the market will too, but this is clearly, again, some of that signaling, some of that positioning, some of the repricing here that the market has been doing. Let's take a look at some charts now. If we started off with the S&P 500 weekly time frame, so down 1.52% for the SPY. Again, 9 weeks green in a row. This was about as straight line up as one could draw or envision or hope for. And so now that we are finally breaking a little bit of that upper momentum, it is certainly taking the froth out of the market here. S&P 500 got really close to breaking out to new all-time highs, but sort of failed right at them. If we drill down to a daily chart here of the S&P 500, again, you can see that orderly selling. We did break below this kind of zone in here. We started to break below the sell-off on Wednesday the 20th, where we saw some nice aggressive selling here on that Wednesday right before the holidays, but we never got that follow through, and the market's kind of settling in at that point as well. So when I look at the S&P 500, it does look a little bit kind of broke, kind of aimless here in the very, very short term. We are down 5 or so days in a row, so there are starting to get more stocks that are quote unquote oversold or kind of resetting into some good actionable levels. But for the S&P 500, I wouldn't rule out coming all the way back down to 4,600. Not saying we have to get down there, but this is a more kind of stronger intermediate term level that we should be paying attention to. If we did fall to this area, that'd be another 2% in the S&P 500 index. That would retest approximately the August highs. That would retest the breakout from early December. That would retest some of this early, or mid-strength momentum that we saw this market really start to accelerate from the beginning of December. So I wouldn't rule it out in the short term. we can keep an eye on this range here. Keep an eye on 47.30. Let's see, as we always do when markets start to pull back, let's see if we can first just get above a prior day's high. And if we can, eventually start to take out a high here, then maybe this uptrend is back into motion. I would say, just generally speaking, short-term action looks like it might just need some more time to kind of repair or settle in itself. But longer term or intermediate term here, again, this is a spot to look for opportunities. I would say it's to build the watch list, look for the strong stocks, look for the stocks retesting some low risk areas. That's what I'd be doing at this point and starting to build up that exposure. That's what a lot of the trading systems that I'm running are doing right now. They're either reloading or starting to recalibrate and look to build that exposure. So that is the S&P 500. Nasdaq 100, again, a little bit more vertical down, a little bit more of a kind of momentum leg to the downside here. You saw some decent selling. We're about 4% now from the highs made at the end of last year. You can see that we haven't quite come back to its big level, but around 387 or so for the Qs. That would be another 3%, 2.5% sell-off. That'd be a good area to kind of come and retest approximately the July highs, approximately the breakout from, again, early December. So let's keep an eye on that area. Right now, we're still just waiting for buyers to kind of step in, put in some type of higher low, take out a prior day's highs, and then, start to work itself back up. So Qs, SPY, kind of in the similar situation here. Russell 2000, of course, now this was, the big question we posed into the end of the year is, can we get continued rotation here? Can the Russell 2000 break out of this year and a half range, and can it start to, be a leadership group into this year? Now, answer so far is no. We kind of rejected back into this range. We fell. We lost that upper momentum. We lost the upper peaks here out of this longer term range. Again, if you go to a weekly chart, you can see what it was trying to break out of here, and you can see the gravitational pull of this range pulling the Russell back into it here. So that is disappointing. That is, going to give us more pause here on the immediate sort of excitement around small cap stocks becoming a leadership group. If we can get back over 200 or so, if we can get up and out of this range, hold these levels, put in a higher low, get back over 200, then we got some, more opportunity that the Russell could be a leadership group here into the first half of 2024. But we're going to need to see the proof right now. So keep an eye on those individual setups, see where you got stocks holding up strong, and build that watch list. Again, I still think that's a pretty good idea around this time. We talked about interest rates. Let's just go to the IEF here. You can see 10-year Treasury bond on its fifth day selling off. Basically looks very much like S&P or Qs, just selling off here to start off the new year. It's still in an uptrend. It's still well off of its November lows. It's still kind of a 3-month positive momentum, positive trend. So let's see if dip buyers can step in here and not let these yields get too wild. TLT, again, very similar situation, still in an uptrend, still trying to hold on to, generally speaking, it's higher highs and higher lows, but we're going to want to see buyers step up in here sooner rather than later. You do not want to see higher volume kind of cascading lower in price. That would certainly be a very, bigger change of character. Dollar index, like we talked about. Actually, we're not going to get a good chart here because of, I believe this was the dividend payout, and TC2000 is not adjusting for it. So this chart looks a little broken here in the short term. It's not actually that bad, but you can see the dollar strength here to start off the new year has just been working in the other direction, as stocks and oil catching a little bit of a bid here as well. Again, it's kind of still in no man's land. Don't really get too excited about it. Same thing with gold, is pulling back here a little bit, just trying to find its footing. It's flirting with its all-time highs for GLD. So this looks still, again, a much better position here. So I think that is where I'm going to keep it here. I am working on a couple of new layouts here to drill down into sectors and industries, trying to clean things up a little bit. So hopefully I'll have that by next video. I'm going to skip any of that for the remainder of this video. So that is it for me to kick off the new year. Happy New Year once again. A little bit of change of character. Again, build those watch lists, understand where you want to participate in this market. Again, a lot of folks waiting for dips. Well, you're starting to get a dip now, so pay attention to it. See if it's something that your trading strategy says you should be allocating to. And as always, let me know your thoughts in the comment section below. What are you looking at to kick off the rest of the year? Do you think this is a true trend change across the board, or is this an opportunity to buy the dip? Let me know your thoughts in the comment section. Thanks as always for tuning in every Friday. Long form market analysis just like this. Tune in, subscribe on YouTube, and share it if you like it. Take care. Have a good weekend. We'll see you back here next week.